Hello everyone, welcome back to our picks of the week. This week we're going to keep it short and sweet. We're going to look at the Euro US dollar and US oil. It's a big time of year for each one of these assets, especially oil. We're going to get to that in a minute, but we want to start off with the Euro USD. Now the big market drivers facing this pair this week are going to be your ECB interest rate decision and US PPI and CPI. Inflation right now is everything. We're wondering, is inflation actually coming down or is it just sort of entrenched? Are higher prices here for the duration? I think probably the second one there is going to be the most accurate. So we are looking at huge numbers, huge activity by the world central bankers right now. ECB always drives the euro. PPI and CPI always drives the US dollar. So Euro USD is definitely one of our picks to click this week. As far as what we're looking at from a macro perspective, you have to really understand key levels. That's absolutely important. We covered them on the live stream Monday. If you missed that one, go back and check it out. We had a nice dialogue about key levels. Probably the biggest level right now in the Euro USD market is going to be the 120 level. So we're watching 120 closely. Right now, as of this recording, we're printing 117.71. A bullish bias is warranted. And you'll notice on the monthly, we sort of are getting that nice bullish pennant and a breakout. So a couple levels I would be looking at is 120 even, and then also your post-COVID highs. Now that high right there corresponds with January of 2021, and that was really the beginning of the rate hike cycle here for the USD, and you can see the dollar gained a lot of puff against the euro, but now we're right back up to those levels. So we're watching that high very closely, 123.49. Now these are a few hundred pips away from where we're at now, but definitely a bullish bias is warranted. So right there, key level is 120. You're going to want to write that down. Now on a 920, this is one of the strategies that we cover fairly religiously, probably 2 or 3 times a week, I would say. This is a weekly 920 EMA crossover. Now the 9 crosses over the 20, we're looking to buy the market. When the 9 crosses under the 20, we're looking to sell the market. You can see we had a buy signal back on the 10th of March. Really, a good majority of this trading year, the big money's been long the Euro USD. The USD has been absolutely taking on the chin. So you still have a bullish bias in the long term. So we're watching that closely. If in fact we wanted to make maybe a short-term trade, we could definitely work a Fibonacci retracement sequence based on the daily. You'll notice we're sort of breaking out here, so you're going to want to watch and see exactly where this top comes in maybe a little bit later this week, and then you're just looking to buy pullbacks somewhere on a Fibonacci retracement level. It really depends on where that swing high is. Right there, spike low. You can definitely just adjust your Fibonacci's as we go up, and you get that maybe a daily high and then a pullback ahead of the ECB or around that CPI report. That's going to give you a chance maybe to buy potentially a retracement level. That's big. You're going to want to be watching this one relatively closely. Euro USD, big time market for the week. All right, US oil. Now, US oil is a little bit different because we are going into fall seasonality. And sort of as we're watching this right now, we're seeing a bit of selling there. I mean, the overnight futures market, yeah, futures contracts up a bit, but US oil's down a bit. I wouldn't get too concerned with that. We're going to really see this market kick off in mass right around Wednesday with that EIA crude oil inventories report. So here's what we need to know about US oil. Bottom line is this. We're going into the fall. We're starting to price in winter seasonality. That means less demand for refined fuels, which is going to be less demand for the crude oil we use to make the refined fuels. The Northern Hemisphere really accounts for a majority of the consumption of refined fuels in the world. So when the Northern Hemisphere go into those winter months, typically you see selling in WTI crude oil and also North Sea Brent. So US oil right here, this is going to be your WTI contract, US oil CFD. You could definitely be looking at what we're working on there. And you got a sell signal back in early August. And since then, sort of been a rough road. We haven't really seen a whole heck of a lot of huge moves, but that 920 crossover that we just covered on the Euro USD for US oil, you're sort of working a weekly sell signal. We're going into fall seasonality. Now, the inflation and the rate cuts and all of that are sort of holding up crude oil, the promise of interest rate cuts. Typically, that makes commodities drive higher. So that's sort of helping US oil, I would say, not plunge down to the 55 level. Now, a retest of April's lows, you can see right here, that's absolutely important that we know where those are, and those lows are down there right around $55, and that was in the midst of the tariff, the crazy trade war panic of early April 2025. So we're watching those lows relatively closely. I think we end up testing those probably by Christmas. Do we know when exactly that's going to happen? No. But be ready. We got sort of a weekly double bottom down there at 61.45-ish, 61.50. If you take that zone out, you could easily fall to 60, and then if 60 goes, you're probably in the mid-50s relatively quickly. Now, as far as how do we want to trade right now? Well, I mean, there's lots of different ways to look at this market. You definitely want to always know your key levels. Last month's low right there, 61.45, that double bottom we just showed you, absolutely huge. If we sell off beneath that, we're probably going to get a nice washout down there to the 55 level. Now, if we want to buy, let's say, okay, Shane, I want to scalp to the long. This double bottom down here from 55 is important. There's your nice rally right up there to 77.65 we saw back in June. Really the heart of consumption. Springtime demand, summertime demand always raises WTI crude oil prices. Now we're on the opposite. We're on the flip side of that. Going into the wintertime, typically you see selling. So big time support level down there at 78%, right around $60. It'll be really tough not to take a bid from that zone, maybe looking for 25 to 50 pips on just a short-term bounce. But if 60 goes, we're probably going to wash everybody out down to 55. That's a look at our picks of the week. That's a Euro USD. A bullish bias is warranted. US oil, I'm sort of on the other side of that one. I think a bearish bias is warranted. You definitely want to pay attention to these two markets this week. It's a big deal. PPI and CPI, huge market drivers for the US dollar. ECB is going to drive the euro. EIA crude oil inventories report Wednesday. That's going to drive US oil. So there you have it. Euro USD and US oil. Those are the picks of the week. Trade well. We'll talk soon. See you.